Hi, everybody. This is the investing teacher, a high school science teacher teaching others how to invest. And I have an exclusive interview today with the founder of Deep Dive Stocks. It's Justin Coco. Justin, how are you doing?
Good. How are you doing?
Oh, awesome. So,
Good.
um, you have a very interesting service that you provide, doing a lot of interesting option trades and looking at a lot of the data. And well, to be honest with me, it's a pretty novel approach from what I've seen. I don't know anyone else that is going through the options and strategies that you look through. So definitely looking forward to speaking with you. And if you could discuss more about how your program works and how it might help other members.
Absolutely. First, thank you for having me. So I'm Justin, founder of Deep Dive Stocks. So I got interested in, I guess, the options arena of the market, mainly because it seemed like it was the area that not a lot of people talked about. It was very hard to find information, education on it. And just the complexity. There's a lot of like moving parts with options. So I just started digging and I happened upon the metric that Deep Dive Stocks uses, which is VoEx, where I monitor and measured like the various forces in the market that most people don't pay attention to, but can have like some pretty significant consequences on the price action. So that led to a whole process of me kind of bundling. I started creating the reports, which you've seen, and the things that stick out the most when you start measuring a stock stability. And so yeah, the reports are, yeah, sorry, I'm rambling again. So
That's okay.
but
So you do a lot of analysis on your options, obviously. How does your program help analyze positions, maybe on
yeah,
a current option chain if you're looking at either a pretty large cap company or even maybe a small cap company?
sure. So there's like three main ways that I think the options chain or that I monitor. I think only one of those ways is monitored in the market at large. And the first is the options layout, right? Most people will tell you about a call wall or a certain strike or a put wall. But what I do is I put it together in a way that it kind of is intuitive when you know the directionality of the options. Here, I'm going to share. Do you mind if I share the
Yeah, go ahead.
thing? Help keep my thoughts in order. So we'll jump right to so there's three, like I said, so three main things that I Deep Dive Stocks monitors with the options. And the first is, wow. Yeah, so the option placement, we talked about that. So where are the call walls, where are the put walls? Then I talk about options hedging. So knowing where the options are and how their hedging requirements change as both the price changes or the volatility changes or time changes. And then lastly, Deep Dive Stocks is unique because I can directionalize the options. So I can figure out if a put was purchased by the retail investor or sold by the retail investor. And this has drastic effects on how that option might affect the price later on. And if it's like stabilizing or destabilizing and whatnot. So just, do you want me to keep ranting about VoEx a little bit or?
Yeah, let's describe how VoEx actually works.
Yeah, so the whole principle behind VoEx is that I wanted something that was simple, but impactful. I didn't want the irony as we see later on with all like the papers I've written, but I didn't want it to be like a dense and verbose material. So here on the right, we see the graph for VoEx. VoEx is magenta, the VoEx trend is this golden line, and then the price is blue. And the idea is that as long as VoEx is within these two horizontal lines, so the top line is the inhibition line and the bottom line is the propagation zone or the propagation line. And as long as VoEx just hangs out in between these two lines, we see that a price will typically increase. It's a stable stock. Stable stocks tend to go up. But as soon as things start getting a little offsides, so VoEx starts spiking like up in here or falls a little bit down in the propagation zone, that's when the waters get a little rocky. And then I follow that up in a different part of the kind of the deep dives ecosystem with some statistical work to figure out, well, what does a price normally do when, like, for instance, it spikes up like this, and so on and so forth.
So do you typically see these lines maybe diverging from each other when implied volatility in a certain stock might be increasing?
For sure. So liquidity is kind of one of the components that is baked into VoEx. And I know that you do a lot of put credit spreads. So your goal would be to find like a high volatility stock that you can then sell your credit spread on, and then the price either continues to appreciate or volatility falls, you repurchase for less than you sold it for.
Right.
And one of the benefits of VoEx is it can help you find stocks that have high volatility without the risk of high volatility, right? Like, the gamble and kind of where your premiums come from is that when you are selling puts on these high volatility stocks, you can have large movements in price, which can jeopardize your positions pretty quickly. Because VoEx kind of bakes in liquidity, you can find these high volatile stocks that are actually quite stable on like underneath the surface. So you don't have to, you do that typical trade of like, all right, I want a highly volatile stock without the nature that comes with highly volatile stocks. Yeah.
Can you describe a little bit more how the VoEx actually shows that it may not necessarily be as volatile? Does it tune into historical versus implied volatility?
So I'll bring up like a classic example. All right, let me switch screens real quick. So let's look at one of the more like traditionally classified highly volatile stocks is Tesla. And we see that its volatility is pretty good. So it peaks up into like the 80%. I think actually this is pretty low for Tesla. If I remember, I think in the volatility is typically like in the hundreds. But from our kind of just what we briefly talked about, notice how VoEx for Tesla just kind of hangs out in the stable zone. So even though there's this high amount of volatility per VoEx, per the stuff that's kind of underneath the surface stabilizing things, Tesla is a pretty stable stock. And then we can contrast that with like Microsoft, right? Microsoft has a historically low volatility. I think it's 20-some%, but VoEx is quite unstable. Kind of, you see that it just swings all over the place. And just recently, this instability with VoEx is really starting to manifest itself with this price action it's kind of been experiencing since November of last year.
Yeah, that's interesting because I was selling a lot of put credit spreads on Tesla last 3-4 months, and you go way out of the money, 0.05, 0.08 delta, and they were paying really good premiums on a 10 with spread. You could make 2.5% a week, which is definitely very good. And
I can believe it.
And it's interesting to see on this chart here how even though the implied volatility was relatively high to get those returns, it shows that it wasn't necessarily that dramatic, besides possible earning plays, I guess. I know the last few earnings I purposely waited it out, but it's definitely an interesting play when you can see the VoEx here showing pretty linear, pretty straight line throughout.
Yeah, it doesn't really, the classic, behavior of VoEx. So when it peaks, typically you'll get like whatever price action provokes like a drastic VoEx movement. So in here, the price was going up. VoEx spiked here in January of 2021 for whatever reason. And then we see like immediately the price action leveled out. It was that immediate inhibitory force of the kind of what was brewing underneath. But for the rest of the year, really on Tesla, we don't see that. And then we switch over to Microsoft, and I mean, it was just getting the brakes slammed on it, every 3 months. And that could be, for your style of trades, definitely could be, something you don't want to deal with when all of a sudden you have a stock that you think is a blue chip, one of the highest cap stocks in the world, and next thing you know, it's down 5, 6, 7%.
So as a general strategy, looking at the pretty recent data to show if it's pretty much horizontal near that zero line, and then possibly selling puts or any other option strategies that you consider?
Yep. And, that's basically it, I think. And that was really the design of VoEx, was to just to foster this high fidelity, but rather quick decision making. And you hit the nail on the head, as long as VoEx trend isn't doing anything crazy and it's within inside of this stable zone, or it's indicating stability, you can do, you just assume that it's a stable stock, so it's going to go up, which seems to hold true. And then, yeah, that's it. There's some. Oh, sorry, go on. I don't mean to cut you off.
Oh, no, that was interesting because, when you're first looking at it, you're like, what do all these lines mean? But
Mhm.
actually, when you go through and you do some training guides too to understand what these graphs do if you join as a member. So it's showing pretty straightforward trends there. Can you describe a little bit, let's say you're actually in a position on a certain stock, how might the VoEx actually help, see what might happen in the future or possible trends?
For sure. There's, I suppose, the context would be you have this credit spread position open and maybe the stock does experience like a 5% drop. The first thing to do would be to come and look at VoEx. So we see like, let's take like an extreme example. Say, it's early morning on the March of 2021, and you see that your stock has dropped 5 or 6%. And in this case, VoEx fell through the floor in the span of like a week into the propagation zone. So we see classic VoEx behavior. It spiked up, the price action got immediately inhibited. And then when VoEx falls below this line, that's called the propagation zone, and it just fell. And so VoEx stayed in the propagation zone and the price fell. So the first thing you would do is come look at VoEx and see if it did anything crazy. If it didn't, well, then you could be assured that this might just be a fluke, or, sometimes stocks do go down. It's the natural order of things. But if you opened up VoEx and you saw that VoEx fell through the floor, then you might want to start getting a little cautious about your next steps. From there, say you are, either risk averse. I'm pretty risk averse, so I understand that position. You would come to the report, and I have all the way at the bottom, I have what's called the expected price range table. And what this does is this calculates the one standard deviation, or the 68% probable range that a price will stay in. And so we have what today's range was, tomorrow's will be, so on and so forth, up until 2 weeks, and then finally a month. And one of the things you could do is you could see, did the price move way more than the market was expecting? And if so, say this is Tesla, say you sold 870 credit spread. You could come to this table and say, well, if this price action continues, I could expect that this position will become in the money in about five trading days, so 1 week. So it allows you to both not only gauge the risk in terms of VoEx's response, but also respond appropriately if you do find that that risk or VoEx's response is, it exceeds your threshold for your risk kind of aversion.
It's very
So,
interesting. Yeah, I never actually considered thinking about the actual option chain in the future like that. In the bottom of that page, it says percent out of the money, percent in the money. Is that a helpful way to possibly see if there's trends in where options are being purchased at?
For sure. I actually really enjoy my reports, I'm not gonna lie, because this is kind of like how it's built, or, it spanned like 2 years ago. And again, you hit the nail on the head, absolutely. And so on another page that I have here is the options layout. And these two right here, they are the current options, what I call the options layout, but it's really just the options chain. And you have the calls on the left and the puts on the right. And this is helpful because, you can rule of thumb, a giant call wall is probably going to be a little, repulsive force, and giant put wall. So kind of like a quick visualization of what's going on in the options field. But the real fun of this page is on this side. So on the right side, we have the change in the options count. And the bars represent the change in the options count from the day prior. So this would be Friday to today. But these lines right here, which on Tesla are kind of indiscernible, but maybe Microsoft, there we go, Microsoft's are nice and big. These lines are the average change per day over the past month. So you can gauge how the current events, stand up to historical events. And Microsoft is a good case because we see historically around in this area, there's been little to no put purchasing, but today, quite a significant amount of puts were opened up. So yeah, that's
That's
that.
interesting. Yeah, I see a lot of, I don't know if you follow Unusual Whales on Twitter. He does a lot of that
Mm-hmm.
with the just option chains showing there's a lot of call volume at a certain price and whatnot. And I know some people like to try to scalp or even day trade on some of those
Mm-hmm.
positions like that.
For sure. And not to plug VoEx too much, but you can, when one of the problems with the call walls and the put walls is there's kind of these underlying assumptions there. And it's one of those like 80, it's not a problem until it's a problem. So 80% of the time, those assumptions are fine, and call walls, the price will bounce off of them, put walls, the price will bounce off of them. The cool thing about VoEx is it'll show you pretty distinctly. One of the things that makes VoEx spike up is if it approaches like a call or put wall that is providing like significant force against that price. So it's another. And then, yeah, so this, and then right here is the expected price range graph. So this is, it's just that table, but in graph form. And then I extend out, it's kind of hard to see here just because of the price action, but I extend the graph out by 1 day just so you can get a little bit of an idea of what tomorrow might bring.
Interesting. I don't know, in general, can your report help analyze, let's say we're doing a credit spread with a very high probability of success? We're not trying to grab 50% a week or anything like
Right.
that, but a 0.05, 0.1 delta. If there's this, like, how would you go about using this program to possibly look for positions like that, you think?
For sure. I'm going to switch screens again. So let's switch. All right. So I went through some reports, I think last week when I was kind of brainstorming this, and I found ET. And immediately once I saw the VoEx, I figured this might be a good example position. And like we said, so in my head, I don't do a lot of put credit spreads. Like I said, I'm pretty risk averse. So when I was brainstorming what I would want out of a stock that's like the perfect candidate, right? I want stability. I want, if it does go down, it doesn't go down too much. But then you sprinkle, that's why there's the caveat there is that you want to sprinkle in that volatility. And like I said, so as soon as I saw ET, it jumped out at me. It has a nice, lately a nice stable VoEx. The price has a very nice relationship with VoEx. I won't get too much into it, but this is a very clean price graph and VoEx graph. But this is really what caught my eye, where VoEx is inside of stability. So VoEx will house stability, VoEx and price have a good relationship, and VoEx is kind of chilled out. So like it was kind of doing some crazy stuff before, but now it's just hanging out. So now that I knew that the stock was stable, what I did was I went to the expected price range graph and figured out where the boundaries of my price would be, that like 68% probable price movement. And I assumed maybe I want to have this spread for 2 weeks. I plan on selling it a week later. So I see here that the ET had a plus or minus 5.82% expected price movement, or a lower bound of $8.20. So I figured, what better place to set my break-even point than $8.20? Since this is the P&L graph of the credit, like I put credit spread. I figured if this is the bare lowest boundary that the market is expecting, it would be a rather safe break-even point. So I went to the options, and these were the 3 that came up for 2 weeks later at around $8.20. And so I guess I'll just fast forward. So you have 2 choices, right? You can sell the $8.50 put and then buy the $8 put. Or if you want to be a little bit more conservative, you could sell the $8 put and buy the $7.50 put. The 1.2 delta is kind of, I think, where you mentioned is like your comfort zone, like the 0.1 delta. And we see that the little bit risk, I don't think they're both 0.2 delta. That might be a typo, but because the selling the 8.5 and the buying the 8 is a little riskier than the selling, pushing the credit spread down a little bit. But I would advocate that even though this is a little riskier and the delta is a little higher than usual, again, VoEx was really stable, right? Like not moving much. And when it does move, like notice when the prices go up pretty significantly, we get these VoEx responses.
Mhm.
So I'm thinking, well, regardless of what you do, that would be like your personal risk assessment. I would probably sell the 8.5 and buy the 8. Where's the, and then so a week later, if you were to wait a week and then sell, these would be your profits, right? It'd be $14 a spread with the short at 8.5, and then $2 a spread at the short at $8. And it's really that simple, right? So we looked at VoEx, we found a stable stock, looked at the expected price range graph to see what like the boundary of that price is, and then went to the options chain and just picked whichever play fit with our inherent kind of risk assessment.
Sounds great. How do you personally use VoEx to do your trades? If you want to do a quick rundown on how you might use yours or your strategy.
Sure. Yeah. I mean, I only use VoEx, right? Oh, hold on. I gotta share a different screen. I'm gonna go back to the PDF so quick. Yeah. So I only use VoEx and the reports. So I don't think there's much other information that I find useful in the market. And kind of the fun of VoEx is I don't have like a trading style necessarily. I just kind of sniff out where the stability on a stock is and then plan accordingly. So for instance, with Tesla, lately, things are becoming a little destabilized. We see the VoEx trend is heading towards the propagation zone. And so I might start positioning myself to expect that the stability is towards the downside, and I can kind of choose however I want to short Tesla. Is it, do I want to put credit, debit spreads? Do I want to short it? Do I want to sell calls? And so that's, for me, the beauty of VoEx is that I don't, sometimes I'll go into a play with like, all right, I want something I don't have to manage for a while. So I'll do like a theta based play, or, I want this premium now, so I'm going to sell some delta. But usually I look at a stock and see what it's doing and find some profit from it. So like, another example, Microsoft, right? VoEx has dipped into the propagation zone right at the start of the year. Classic price depreciation after that. But now VoEx is headed back towards stability. So I think, personally, I might start looking at going long on Microsoft until something tells me otherwise. But as long as VoEx is starting to head back to stability, it seems like that's a reasonable plan.
Looks like it went into the earnings report that happened last week too. You can see that in the trend lines, at least partly influenced. I see you have a BBIG up there. Do you want to describe that one a little? I've been following that very closely.
For sure. What a wild time. So I'm going to be honest, it's messy. Yeah. The first thing is, most recently, this increase in the price was met with this huge VoEx spike. So whenever you see like those big spikes, it means, the undercurrents of the stock were not pleased with what just happened. So classic price gets pushed down, but now, it's honestly, it's messy. I wouldn't say that it's a stable stock by any means. Right. VoEx, this is always a weird moment in time when VoEx trend is like very clearly headed downwards, but VoEx daily is like kind of trying to peak back up. So in this stock, like I said, I'm pretty risk averse in that, like, I don't know, I would be more bearish on BBIG than anything else. But in your position, for instance, say you're like, I can handle this risk. Again, we would just go down to the expected price range graph and see like, all right, if you want to sell a put credit spread 2 weeks out, your break-even point is probably around $2.20.
Interesting. Yeah. I wouldn't do credit spreads on something high risky like that. I would either just sell a put or just sell a covered call. Because I was looking earlier for BBIG, it's at 329 right now. And if you go to February 18th, just a few weeks later, for a $2 strike put, you can make $13. This is a 6% return, and it's a pretty good cushion from 320 to $2. So not only do I own shares, I'll also sell puts at a much lower strike price.
So you said like the 220.
A $2 strike right now pays 13. So it's about
Yeah.
6.5%.
So we see like if BBIG went down every day, you're looking at like 2.5 weeks, or I guess right at 3 weeks
Yeah.
between the T10 and T20 for that price to get there. What's interesting about BBIG, maybe not necessarily what you might be interested in, but notice how, so obviously volatility has been skyrocketing. One of the things that I measure also is how volatility has to be hedged with the options.
Yeah.
And we notice that as volatility increases, a lot of shares have to be purchased. So BBIG is in this unique position where if you, so say you like open up some position on BBIG and volatility starts dropping, you may experience IV crush from Vega, but that dropping volatility is also going to push the price further down. So you might, go long on a put and still experience a little bit of a loss, because as that volatility decreases, the price starts decreasing. As the price starts decreasing, volatility gets dropped, and then you kind of form this little cycle going on.
Makes sense.
So this is the hedging matrix, and that's what that measures. And to have the hedging matrix controlled by the volatility is pretty uncommon like that.
All right, sounds good. Do you want to just share real quickly with members what would they receive if they decide to join in your program?
Oh, for sure. So deep dive stocks, the premium membership has a lot of features. So there's a ton of educational information. I think there's like 7 educational packets now. You get 400 and some daily reports, plus you can request any reports you want, and they're delivered directly. You get your own Dropbox folder, so those get delivered directly to your Dropbox, and plus the 400 reports. Then I'll show you, there's also, I do a market scan every day. And then so every day you get right to your email, you get a whole market scan of the entire market. And these include things like which stocks are in a gamma squeeze, which stocks we saw. Remember those big VoEx spikes that we saw? I monitor the market for those as well, and they have some pretty predictable and like statistically relevant price action. And then there's another thing, but it's another VoEx based metric, but it's the persistent overexposure. So you get every day, you get a market scan with this, you get all of the reports. And then every week I send out an email, usually like Sunday evening, basically just my thoughts on the market, what plays I might engage with, and then some updates about deep dive stocks as well.
Oh, sounds great.
Yeah.
All right, Justin, I think that was all the questions I had for you. Do you have any quick questions for me while you're here?
I'm still boggled on, I love your trading style. I think it's so foreign to me. So I love like when you talk about it. I was watching a few of your videos for sure. But no, yeah, I think that's all from me.
Yeah, I'm starting to dabble a little bit on debit spreads here and there, but main go to those cash secured puts, credit spreads, like just be consistent, 2 to 4% a month. I'm happy with that. As long as you get it pretty much, even in this rough downturn in January, wasn't quite as good as other months, but sell those cash secured puts. If you're really far out of the money, just wait for that pull back up, and then just sell covered calls on the other side, or roll your positions if you need to. So
for sure. Did you start with the, like, as this was like your first trading strategy, or did you slowly migrate to the credit spreads?
I actually started with covered calls on pretty much blue chip stocks that I started with, because I could see that you could receive a little bit of premium, go really far out of the money, so you capture a lot of that upside. And it's pretty neat getting paid, every month to sell a very low delta covered call on it. And I still continue to do that in pretty safe, stable stocks. But then cash secured puts too, you could sometimes earn slightly better returns on it.
Oh, for sure.
Even if it's not necessarily like a meme type stock, but if it's a stock that you want to own that's maybe a little overpriced right now, why not sell a cash secured put a little bit out of the money, get paid to do it, and then if you happen to get a sign, you just bought your stock at a discount. So for long-term positions, that's usually a good way to get into it, I think.
Yeah, no, that's fair. Definitely for the long-term positions.
Yep.
So, but yeah, no, that's all. Do you have any questions on deep dive stocks or?
I think that's everything. So again, just like to thank you, Jason, from Deep Dive Stocks. In the description down below this video, there's a payment link there if you want to think about joining. And you also have a Discord, right? So I
Yes,
could leave a link to your Discord. You have a free service there as well. Okay.
that'd be perfect.
All
Cool.
right, Jason.
All right, good seeing you. Thank you.
Seeing you.